week about.
All right, good evening, guys. Ken at Tortoise Capital. This is the small group coaching cohort one for August 19th, 2024. I'll do my quick check-in. So I'm working on how to create AI personas to replicate various personality types for Army logisticians so that we can have a synthetic panel of judges to evaluate human creativity on a set of problems that we gave the kids by surprise with only 2 minutes, and they had to quickly just kind of blurt out what was in their head in writing. And so there's 1,000 students and 6 questions. So there's like 6,000 different things to evaluate with my group of 5 people. So each one of us has to do 6,000. Well, I'm never going to do that again. So what I'm going to do is use this as a training set of data, not just to give the students their assessment, our assessment of their creativity, but also so that I have a training set to investigate how to create these AI personas. And I think I have broken the code on that. The secret I'm using in that is that the expert persona that they are representing, we're measuring the amount of surprise that judge has when the students offer their wacky solutions. So the trick is going to be to teach my humans and the AI that what I want them to measure is the amount of surprise they felt when they saw this wacky idea that the student offered. So the problem was, one of them was, in 20 years, we're going to convert the entire combat fleet to electric vehicles, electric tanks, and instead of using diesel and aviation fuel for the turbine engines we use to run tanks right now, we're going to replace all that with battery power. So they get surprise. They have to design the supply chain concept to deliver battery power to the electric vehicles, and they get 2 minutes and 200 words to type that out real quick. So it's really just how quickly can they frame it, think of something, and then jam it into there. Well, typically you would evaluate it by the sense of novelty. How unusual is that idea? And how feasible and acceptable? Could we afford to do it? Is it an acceptable risk? So the judges in this are all experts in various fields of logistics and energy. And my insight was that all we're trying to do is measure the degree of wackiness, the degree of innovation or novelty that comes out of that student's head. And we're going to measure that by using Malcolm Gladwell's blink idea, which says that within 2 seconds you get a gestalt kind of reaction to something, and you form an initial impression, and then everything else is rationalization. So when I had the AI generating these different personas and these synthetic judges, I had to go back and remind it that what I'm really doing is just asking it to figure out how surprised they would be to see what this non-technical student would offer as a solution, not whether or not the idea itself could work or was in you, just how surprised are you at the student? The idea being that if the student offered an idea that was kind of already mainstream, it is already out there in the world, the professional would have seen it and wouldn't be surprised that an amateur would have offered that. And so the probability that that idea is going to offer some kind of surprise breakthrough that our opponent wouldn't get is really small. So the only hope there is for some kind of surprisingly transformational response would be something that a professional would never expect to see come out of the mouths of babes. So that's going to help us with the novelty. And then I'm going to generate other personas now that I know how to do that. Other personas that can judge whether or not the thing is actually feasible, or if there's a way to see how you could actually accomplish the mission using that crazy idea. That part is a slightly different persona. So I spent most of the day monkeying around with that idea, and then got put in contact from a couple different commercial vendors who are in the business of creating coaching personas to act as AI coaches to different people for their self-development. So it turns out that the work I'm doing um, in AI and coaching is going to have a big payoff, not only for the Army, but for us, because I've been playing with that for about 18 months and I have some very clear ideas about what I think needs to be done. So we're going to see how that shakes out. I've already been experimenting with that that professional development model and the confident communications model, where I'm trying to have the AI adopt these different personas to act as coaches along our developmental journey. So I feel like this is a project that the rest of the world is starting to catch up to and realize how important it can be. So we're on the kind of cutting edge of that um, with what we're doing. So good week trading wise for me. I mean, if you look back about 10 days at the peak of that little sell off, there is a bottoming tail that formed, and all of the swing systems for channeling and overreaction fired long right at the time when there's maximum pain and suffering in a bull market. And it just blindly says, oh, you're supposed to buy tomorrow. And every one of those is a massive win if guys just follow the rules and that's the hardest thing to do with those two. There's two rules in the channeling and three rules in the overreaction, and the dang things uh, are like 70 to 80% successful. So uh, in terms of market classification, the information value of those two systems for the big broad indexes cannot be overstated. They are so important because they will always tell you to go long just when the short-term mentality of day traders and swing traders is at its emotional worst. That's the time when the long-term traders are just saying, oh, that's just a correction. It's time to buy strength on dips. And that's exactly what those two systems do. So once again, they just prove how sometimes simple rules and simple systems that put you on the other side of the market from the herd emotions can be really powerful. I'll finish up just by saying that yesterday was really a good day for the for cohort 3. Really good session with Hamad and Chi Wing, and that's, to me, it must hear TV, must listen. It's in the cohort 3 uh, lesson with yesterday's date, and then in the afternoon there was about a 2.5 hour swing trade session of Q&A, and it was a $5,000 workshop just by judging the material I've covered in the past at VTI, and getting down to core concepts that were foundational. Um, there was enough goodness in there when you unpack it that in the old days with in-person workshops, we'd have charged $5,000 for the information that's in there. And it was hitting basic skills again, but at a nuanced level, and really explained how to look at red zone, yellow zone, green zone, how to look at overbought, oversold, how to look at location and volatility for setups, and how to do core and turbo. on multiple timeframes. All the things you've heard me talk about before, but the content of it was really, really good. That is also in your in the coaching course. It's under additional lessons, and it's just labeled as swing trade Q&A with yesterday's date. So I would strongly encourage you guys to listen to both of those video sessions this week and get on top of it. It's a good refresher from the top of the mountain looking down, sort of, in both of those cases. So that's everything I got. Why don't you guys go ahead and give a quick check in, and then we'll jump into the session. Aho.
I can go first. Let me share my screen. Okay, so last time we talked about creating a new system because the old system wasn't working. So you suggested trading DIA, trading DIA, XLE, EWZ, and EWW. So I created that system and I noticed that the results weren't so good. So I looked at the combination of market and symbol and pattern. So I came up with this system, which in an up market trades DIA and EWW on the collapsing dragon, and trades a few symbols in each for each combination. And this system has an expectancy of plus 0.8, which isn't that good, but I thought I'd try it. So that started on the 15th, which I guess was Thursday. So Thursday, Friday, and today were all losing days. So I'll just continue running the system. And I got 72 trades those 3 days. So I guess my only question really is, do you think it's a good idea to only use certain symbols with certain markets and
Yes.
certain?
Yeah. My recommendation last time was to keep the same system, but only take the first signal and to see what that did.
Mhm.
Is that what this is?
No, I tested that. So that's tested with this additional trades. Additional trades is my version of the my name for the 2R battle drill and the other battle drills. So if I filter those out, the expectancy is a little bit worse. Only additional trades had a 0.19 expectancy.
What just remind me what the rules are of that system, because I'm surprised at those results.
This is sort of simplified. Let me just show you.
Okay, can you show me a couple days of trades?
Yeah, it's simplified version or approximate versions of the collapsing dragon, cut it too long, cut it too short, and SSC. So for example, the last day of the back test, let's see. I'll show you today's trades. So on DIA, it got 5 trades today.
And on the first trade, what is the where's the exit on that?
It's
Where it crosses the red line.
yeah, it
And
was
why is that a counter two?
So that's
Kata
uh,
2 requires a successful previous trade, then a retracement, and then the resumption.
yeah, I don't
So
have that.
the second trade, I think, is close to a Kata 2. And the second trade looks and the second trade is perfect where it exits when it comes to the skin of the dragon. The third trade, uh, where the exits on the other side of the PSAR.
Yeah, so it
I
dropped.
think I think that exit is late. I think the skin of the dragon is the better exit after the R10 rolls over. The fourth trade looks reasonable to me. I'd be out at the collapsing dragon. Um, fifth trade should be no trade because that's not a Kata 2 because you did not have a successful trade before that. If anything, that's an SSC that should enter where the PSAR is hit 1 bar earlier, and that trade should not lose money, in my opinion. Just using my basic exit of you have a winning trade in hand, the R10 rolls over, take the skin of the dragon.
Yeah, that's what it did. It exited right here.
Oh, okay, I thought that was later. All right. Yeah, the entry on that should be at the PSAR dot. See where the PSAR, where the price crosses the PSAR? Right there is where it should be entering.
Okay.
Yeah. I would accept where if you go to, if it entered when price hits the previous PSAR dot, so on that, where your little arrow is, go to the left 1 dot. Now, as that's going north, see where the previous dot, not the dot that it's in that bar, but the dot that just got hidden. Yeah, that second to last dot is the last active PSAR dot when price is live in that bar. And when it goes through that dot is where that thing should enter.
Okay, I can update that.
Yeah. And I would invite, instead of worrying about the slope of the RL10 and all that jazz, just use the 10 period simple price hitting the simple moving average 10th, the spine of the dragon. Test that exit. Yeah, but so it would have been 1 bar later. Yeah, so just as a way to simplify the coding so that you're not waiting for the RL10 to roll over and is the slope negative and then jump stop. There could be some complexity in the code to do that. And so it just says, let me just, the halfway point typically between the PSAR dot and the top skin of the dragon is the spine of the dragon. So if you just said, look, I'm just going to use a 10 period price touching a simple 10 period moving average and see what that does for you.
Okay.
So you got to be strict on the entry and strict on the spine of the dragon. And then what I want you to use for the stop on it is the PSAR flip box. Make that the R capture. That's the execution R. I just want it measured in terms of execution R. And so like on the first trade that you have on there, the exit would be where the RL10 goes from red to, now go back to on the front on the start. See where the PSAR now go to just change the Is this a new chart that looks different than what we were just looking at?
This is how we started. These are today's trades.
All right, go to the third trade. Yeah, that's where it was. Yeah, the third trade. See where the PSAR dot below the green dot is? I want that to be 1R.
Okay.
So so your execution R is just the width of the PSAR box from dot to dot after it flips. And then use that to measure the capture of R when it comes back and hits the RL10. I'm sorry, the 10 SMA.
Okay. And then for the kata 2 entry, it has to be a successful SSC or
Yep.
a collapsing dragon preceding it.
Yeah, you can take so the SSC requires a successful short side trade had to have happened that morning, right? So it had to have uncontroversially, it had to have a large, harsh winter. Then and only then you get the PSAR flip entry, right? And then it holds that until the price comes back to touch the SMA 10. Simple. If you get a successful one of those, then you can do a kata 2 after that.
Okay.
And then the collapsing dragon would be like go to the third green dot. Yeah, when that fails, and right when that PSAR dot flips, your entry is in the first dot. Yeah, one more to the left. Yeah, right there. That would be the short. And that one would end up scratching, it looks like, because it hits the SMA 10. And then that now looks like it constitutes an SSC. The SSC should be that fourth green dot, but back one bar right there. And it should hold one bar later than your box shows. Yeah, it should be getting out right there. But the size of the risk box is from PSAR dot to PSAR dot. Because those are the precise parameters of the entry and exit signals. And I want to measure, since you have the ability to run a lot of back test trades, I want to strictly test that discipline. Simplest entry, simplest exit known to man.
Okay.
Okay, let's try that.
Sounds good.
All right, next. Who's up?
I can go next.
Okay.
So I took a couple of days off last week to go back through charts and integrate some of the concepts we talked about at the last two coaching sessions, which I think are really going to help a lot. So I started. I'm going to start trading Dow futures instead of DIA for a little bit and see how I like that. The MMRB I'm using basically the same thing I would use on DIA with the decimal point moved over two places, and it looks big on my chart. So I'm not. I'll have to just watch that and see what happens this week. I may need
if the box feels large, and you may still be able to exit sooner and never even come close to a full 1 hour loss. I don't think that that's a bad thing.
Well, it's definitely comforting since it's a new name and the characteristics like once it gets past the opening few minutes to trade identically. So I figure better to be too big and I can always tune it down.
That'll keep you from getting too many contracts on there. At some point, what you'll end up doing is entering 2 contracts. And then when you want to lock in the win for the trade, you peel off one so that the whole trade is always going to be positive, and then you can be very discretionary on the second one, which is where you're going to try the sniper exit. That's a possibility. So
So that makes sense to do
that's
that.
where that can go.
And another thing that I'm looking at is, and this is something that I find challenging with the exits, when you get a good move and it sort of overshoots the dragon and then it has a sharp pullback.
Yeah.
It's you make the decision to go to the
One
dragon.
bar low, yeah, one bar low.
So
If I'm in the money and this thing is starting to collapse, okay, done.
looks good.
Yeah. Just take
I
a
find it more
bite.
challenging when, you get the impulse
Yeah.
and then it just sort of starts moving sideways into the dragon, and the RL10, it'll kind of lean over, but
Yeah.
you're not sure, well, is it really coming back, or is this just
Yeah.
a pause and it's going to keep going?
And that's why I would say what I was saying with George is that the spine of the dragon, the SMA 10, probably over the long run, the clarity that gives you from a mechanical perspective probably saves a lot of emotional energy.
Well, you can always re-enter, but the re-entry has a cost, so.
Right.
I'm trying to kind of figure out where the give is. Like DIA, sometimes it'll have, it'll pull back, it'll be making a nice move, and it'll pull back almost to the PSAR and keep going.
Yeah.
And so, maybe just getting to know maybe having a little bit different exit for the characteristics of the different names,
Yeah.
but.
Every time there's a really big positive spike and I'm feeling joy and a little bit of excitement, I just automatically raise my stop to that bar low and be happy, raise my stop, and just, been disappointed at the high school dance so many times. And then if that bar just keeps going and going, I take half that bar.
Yeah.
And it really comes down to where are you with respect to your average win? It just drives me crazy to have an above average win become a below average win because of a stupid generic exit rule.
Right.
That just drives me nuts. So I can't, I know how to re-enter because I expect to be wrong in premature exit all the time. So I have no hesitation about just say, yep, that was dumb. I'm back in. Out, up, dummy, back in. It happens all the time. And I'd much rather live with that little bit of being skittish and nervous like a child than watching a really good trade just slowly ooze back and then spike out before I make a decision. I don't like that.
When you get the really big bars, I find it easier to okay, I'm taking my profit. I'm not letting
Right. That's right. It's the very joy. It feels like that was the grand finale of the fireworks that was rocketing up and go, everybody's happy. Raise my stop.
Right. I find it harder when it's more of a controlled move, and you may not be getting these big candles, but it's it's moving, and then it just kind of leans over, and it's like,
it just rolls over and starts grinding, and that's, to me, the spine of the dragon or the skin of the dragon, and it is what it is. It times out that way.
Well, I'm watching my capture rate and kind of keep an eye on that and see if there's some data in there to help me with that. So it makes sense to find sort of the average between the PSAR and the
Yeah,
skin.
I think you'll benefit a lot from the swing Q&A. That's about 2.5 hours of just we didn't take a break on it, but there's some logical break points in there. I think you're going to benefit a lot from that. How to interpret red, yellow, and green price action.
I'll take a look at that. But that's really basically it. I'm trying to fine tune some things, and I just keep improving.
Sounds good. Okay. Who's up?
I can go. So for last week, it was fun watching paint dry on so many stocks. I mean, things weren't just moving at all.
Yeah.
But I think this was my best week for learning about sideways white channel because I would get trapped in them all the time. And I feel like last week's consistent behavior has now taught me quite well. But I think I can recognize a sideways behavior. So I think that was my learning from it. One thing I noticed is I'm beginning to see the RL90 and 270 behavior and how price intersects with this. So I'd like to learn a little bit more about it. So what I've seen is when the two regression lines, prices between them, it seems to be bounded by them.
Yeah.
And when it's all on one side, it's a trending behavior.
Yeah, the main point to remember on that is that the 90-270 relationship is the same as the 10-30 relationship, but for two fractal time frames higher. And whatever time frame you're on, if you think of yourself as, hey, I'm the active trader on whatever time frame I am on the 1030, whether that's a daily bar or it's a 3-minute bar, you're the active trader that's looking to be in early and out early. That the 90-270 guy on that time frame is the long-term buy and holder. So if you're on the 3-minute bars, all that really means the long-term buy and holder to you is the 30-minute bar because it's 3 times 3. So you're really looking, the guys that are trading on the 30-minute bar are the long-term buy and holders. And so when you're looking at the 90-270, what you're really looking at on a 3-minute bar is the psychology or the market psychology of a very fast swing trader. The guy who wants to hold it overnight, and can stick around a little bit longer. If you're working on a day chart and you're the trader who's making decisions with end-of-day data, the 90 and 270 represents a guy that's looking at 9-day charts, the 9-day bar. Like every 2 weeks, he's going to update his decision making. So the frame of reference there is that the 90-270 is that very, very slow pair. And when that 90 rolls over to the 270, that's a P1. That price level right there is probably the maximum upper limit for any kind of tactical trade short of that's really going to be some kind of barrier because the 90 is done. It took 20 bars of no new gains to make the 90 roll over. So that's how much steam has come out of this thing. And if you had an upward sloping 90, which is the health of the next higher time frame, remember the 30 on our time frame is the health of this market. And when the 30 rolls over on our time frame, that's the owl that says the upside move is over, and now the most likely occurrence is some reversal. So that's the owl giving you a warning. Now, for the 90 to also roll over means you got an owl on the next higher time frame, which means that the 30 and the 10 on this one have probably already crossed and are on the first leg down anyway. And when you combine that, like you've already started on the first leg down on the 1030, and the 90 has reached the 12 o'clock position is starting to roll over, then you might be getting ready to see a second big leg down. And that's where I really have a directional bias, is if my 10 and 30 are already going down, I may have already cashed one good collapsing dragon, and now the 90 has peaked and started to cross. I really think we're heading for winter, and I'm really going to pound the heck out of collapsing dragons until proven otherwise. It's not a confirmed until the 90 has rolled over completely and then crossed the 270. You can actually get quite a wide gap between those two. But when the 90 has crossed the 270 is going down, buddy, we're in the winter on the 10 and 30. And now it's a question I should have been exploiting the short-term collapsing dragons, and now I'm just starting to stalk the spring. How far is that 90 going to come down? It takes an awful lot of negative behavior for the 270 to roll over and start going negative. I mean, it took go back and take a look at the COVID meltdown. And look how long, even after that, it took for the 270 to go negative. But when it did, it really sets up a boundary for the recovery move. Until that price gets through the 270, the rebound is not officially there. So if you spend some time thinking about the relationships of those fractal RLs, it'll start giving you a layered market condition of short term, long term, that kind of stuff. And just remember, the 30 is the health of this market, the 90 is the health of the next higher up time frame, and those two relationships, the slope and relationship of the so when the 30 is declining and it's under a rising 90, you just had a short term sell off in a bull. And now the 90 starts getting into the 12, but the 30 has started to reverse. That's my first long side spring target to get back to the 90. And it's going to test that. If that was just a spring and it's done, the price will get up to the 90 and then fail. But if it gets through the 90, now we got something going on. So that's how I'd invite you to look at that and then just kind of play those little narratives in your head. And it may be that we can get to a almost like a flashcard of the 30 versus the 90. That and looking at a grandfather owl and a father owl. I think of it that way. If the 10 is the trader's price, the 30 is father owl, and the 90 is grandfather owl. And so I think there may be a flashcard in there that we can use to standardize our assessment of the markets. What you really want in the whole world is sort of you wanted the 10 and the 30 to become amazing and powerful, so strong that it made the 90 and the 270 both move up. And then you have the 270, the 90 is up on top of that, the 30 is up and above those, and the 10 is upward moving. That's the outrageous bull run. And that will last until the 10 crosses the 30, and then the 30 rolls over. Then the 10 and the 30 cross the 90 and start collapse. Then the 90 will roll over, and then the 90 and the 270 will come to a pinch. And then we're going to find out if the long-term buy and holders are going to see that as a buy on dip or if it's going to be panic. So, so I would think of that as a layered market classification, and that will help you with deciding how much exposure to have between like day trading, swing trading, and core. When the 90 and 270 are going down, that market is so bad that ETF2, all of those indexes are below their 4-month moving average, and it should be in cash. Anyway, so that is, and that's covered in that swing trade video very nicely. How to use the risk Z and the ETF2 weekly measurement. You would not be wrong to have that as a daily update. What are those 10 indexes relative to their 4-month moving average? And each one, so you get 10 indexes, and each one is yes or no. It's above or below its 4-month moving average. and that should give you, if it's above, you can put 10% more into your exposure for swings. That has always been a good idea for the last 30 years. Maybe the single biggest preventative medicine that you could get for the longer term systems is ETF2. I pay attention to that thing a lot. And that's covered in the that little Q&A session I did. All right, what else you got?
Okay, no, that was great. I
Okay.
didn't get the price targets, the crossing as being price target, but I'm seeing that, and now that this makes a lot of sense. Okay.
Yeah.
Okay, I'm good for now. Thanks.
Yeah, so what I'd like you to think about too is if you're just initiating like a swing trade and you see the 90 and the 270 are above you and starting to stall, that's really where you should be projecting what is my average win on a good trade on those swings. And if I get to that, man, I should be holding on to that because I don't really expect it to go that much further in a decaying market. That's, to me, having the stats on your average win is crucial. Okay. All right, Juan Carlos, what you got?
Hi. So today was great for me. It had a good trade on Alcoa, and I had created 1 to 3 exit on this once it incurred into C3, and that worked amazing. It was a really nice trade. So that trade improved my statistics, started to improve my moving. Where is trade station? Yeah, this one. So yeah, it was this trade, which was really nice.
Yeah. Right by the numbers. Yep.
Yeah, and I added the SFC to and that improved my short statistics like in a very big way.
Yeah.
Reaching almost a 50%, which is pretty good. Although my average is not that good in the shorts. I'm still reviewing one by one, but that's what I have right now.
Yeah, that's a coin flip that pays 3 to 2. That's still okay. That's sort of the bottom level of acceptable coin flips, the 50-50 that pays 3 to 2. You'll take that, but we'd like it to be better, but it's still tradable.
On the long side, it's pretty nice.
Yeah.
2 to 1, 42%. So my stats started to improve big time. Where are you? Where is I closed Excel? Sorry about that. It should open. Oh, here it is. So order comparison, pivot table, trade data. So from last week,
Yeah,
that's the capture, the trade from last week. We talked about this, so it's a 4R trade, which is the figured trade. So that changed my stats. Already started to move positive. And I still have one trade off. Well, actually 2 trades that were winners on the live, but losers on the other one. Oh, sorry, the other way around. And that the number here is off a little bit. So I'm hoping to go up to 100 trades with this code. Maybe I'll keep on debugging a little bit, but I'll leave this code running to achieve some good sample. And I tested it with EWW. The results are not as good, but are pretty good. So I'm following a couple more days, and I'm going to turn it on and start trading it with a small position size on EWW.
Yeah.
And moving forward on that. What else? So I'm starting to look at a system that I was collaborating with Jeff, and it looks amazing. But I'm working on exits. Yeah, the results are tested it on Bitcoin futures, and whew, it's incredible. And it's weird because it just stays in the market all the time, starts flipping. I think it can be improved even more by taking profits on good trades, and I'm looking into that. So letting aside this code to build some more trades and start looking into another one, and that's that. That's where I'm at.
Okay. Let's see here. I want to show a screen. Let's see what I got here. Yeah, just to just shake it loose and just stretch your mind here a little bit. Just a little bit of enjoyment. Yeah, I want to look at CLF. Show you something on this. Now, that may be my most joyful anticipatory long side trade of all time. Today's closing price in CLF. So that's a daily bar. When you look at that, what do you feel? What do you see? I am so hungry to trade that thing and ready for a great big move like compound critical state. I almost can't even express my joy. Sharpening my knives, ready for a fight. Is there anything in that chart that triggers the same thing in you?
Well, I noticed today's was rejection, so that's
Yeah.
bearish to me.
Yeah. But to me, it was just bearish enough after it tried to be bullish. And then the amount that it failed back was that it only fell that far was bullish. See, so here's how I interpret this thing. So you had whatever this little bottom was, PSAR flip, and it gives you this and gives you one more little one. And then it tried right here and failed. And now the whole bottom of this thing falls out while the rest of the world was selling off its little 8%. This was where the market itself was hitting all-time highs. And that was the peak pain and suffering. So this thing had one little surge, which then failed. It failed one more step. And then yesterday, at the very bottom of that whole run, it ends up in the smallest doji of the last 40 days. And after this pain and suffering, this is actually just a sideways chunk. And then this is a sideways chunk. And now I got this little lonesome doji here. And today there was a slight gap up. It ran up all the way to here and then came back and then closed essentially in a zero state. They tried and they failed. But I take a look at that and say, the low of today is higher than yesterday's high. The doji wasn't threatened. The RL10 and the RL30 have come to a closure, and this is the last time that it crossed. So this is where it crossed to the upside, and then it closed here. So this was all good. And then it pinched shut, and then it did leg 1, huge leg two. So this is all bad. But now it has failed to fail further for 15 days. And yesterday was that tiny little doji. And today was the first venture. That was a serious effort to make it go up. And then they couldn't get any follow through. So they just decided, let me capture my intraday gains and hold no overnight risk. So all of those guys that were day trading it and try to push it up all left. But there was that did not, that selling, that false move up and then the harsh selling triggered no panic selling whatsoever. And it already closed with a higher low and a higher close. So if it gets above 13 tomorrow, officially, I'm piling on that thing like a maniac. And this is a wide enough move from 1260 to 13. That's a 40-cent move. And in Cliff, the R10 is 7 cents. So this was a half of a range stat. That means the inside of tomorrow's range is tradable. And if it doesn't gap, and it opens right here, just the move to the top of today is a potential 4-to-1 risk. Now here's why. So here's what you'll hear from what I told Hamad to stay out in order to stay out of the channel, to stay out of the chop. I said, look, if yesterday at the close of today, if today's range was that big, then by definition, that's tomorrow's yellow zone. And my mechanical entry, all other things being equal, would be 5 cents above and 5 cents below. And that move would be my execution risk if I was doing swing trading one day at a time with yesterday's candle as the execution risk. Now, the rules of green zone, red zone, and yellow zone trading says if I'm in the red zone below yesterday's low, I should really be concentrating on the collapsing dragons and the short side trade. And if I'm above yesterday's high in the green zone, I should be thinking about the long side trades primarily. If I'm in the yellow zone, the only way I'm allowed to trade that is if I can see a 2-to-1 between the red line and the green line. So right now, the size of today's bar in CLF was 40 cents. And the range stat is, let me read my own chart here. $0.71. So this is slightly larger than, that's like 0.6 of a range stat, check or hold. So if it's 40 cents, that means that because it closed at just about the low, it closed like right about here. If it opened there and then did not violate the low, just from the red line to the green line, there are 6.07s. That'd be 42 cents, right? So if it opened at yesterday's close and then starts moving up and it moves 1 MMRB off the working low of the day, I've got almost a 5-to-1 or a 6-to-1 trade just to the top of today's price. But if it opens right there and it goes through the red line, then I'm already into this trade. And then if it breaks below the doji, I have a runaway collapsing dragon the other way. So just trading inside today's yellow zone, I have at least a 4-to-1, because if it goes up 5 and comes back 1 and I get out, I get to capture the middle 4. So I got potentially a 4R trade in here, even giving it 1 move off the bottom and 1 move on the retracement of an MMRB. I got potentially a 4-to-1 trade in there. And then if it breaks above yesterday's high, what's the pattern? If it breaks above that line right there, what's
Yes,
the
that's-
pattern?
1, 2, 3.
3. Yeah. And that's if it doesn't go below those. That would be a perfect 1, 2, 3. So what I really, I don't require it to open where it closed. I mean, I could see if it opened like with a slight gap up, but I still had a couple 20 cents to the top of that day, I could trade that one intraday. And then if it breaks out, it's going to go. And then if it breaks above that dot, that's the PSAR -1. I'll put another position on at 1340. So I'm ready to buy this thing at 1340. And that would be an amazing move. That would be a range stat move. So I love the upside potential, especially with all the people that are doom and gloom here. If they see it going up, they're gonna wait to see how far it goes up so that when it stalls, they can short it. Yes? Yeah. Or they're gonna start shorting it up in here, and then their stops are gonna keep getting hit, and you'll get some kind of short squeeze on this thing for a 1-day pop to the upside. But then if it just behaves like a failure, as soon as it goes below 1280, today's low, I'm short. Second position short if it breaks below here. And now I got 2 positions on a thing that looks like, hey, I could very easily do that. Which it wouldn't surprise me because the whole market's been up so strong that if the market takes a tactical pause here, then that would facilitate short side pain and suffering. So CLF could not be in a more potentially explosive position. And if the pinching of the 10 and the 30 here, it's equally likely that this thing goes like that or just goes like that. And either move is going to be huge. Love it. That's why I am drooling at the sight of that. Now compare that to Tesla 7 days ago. Happy, joy, 10-to-1 split. Peak. Oh no, that's Tesla. I was thinking NVIDIA. Although Tesla works too. NVIDIA is going to look almost exactly the same. Pretty much. This was that's the all-time high after the joy. If it gets above 140, look out above. So here was the leg 1, leg 2, leg 3. Look at that gap down, and that's a bottoming tail. So your stop is right here. And I bought around in here and added some more in here when that little doji broke to the upside. That's what Cliff is doing right now. It's that, I talked about that little doji, a failure to fail further. Only Cliff went up and then rejected and came all the way back. NVIDIA was stronger that it closed right here and broke through the PSAR. And that kind of move off that tactical bottom is what I'm hoping Cliff will do. If it fails to fail, then somebody wants to come in and buy a great American steel company on sale. So when I look for those things as those tiny little dojis at logical turning points, Look how close that is to the pinch of the R10 and the R30. Here's where it pinched last time. Broke. Look, here was a downward pinch, and then the upward pinch did nothing, and then it resumed the downward expansion, and now that came into the station. So that's a turning point. That's P1. And it had the smallest range of the last 40 days, except for maybe that one. Now, if Cliff fails tomorrow, that's what Cliff's price action today looked like. It was a higher low. They ran it up, couldn't hold, it came back. And then instead of breaking out and going like I was advocating for Cliff, instead it broke down, and then you get this. Well, all of that volatility has now compressed. You got this little pinch, you get a tiny little doji. So that's where Cliff is right now. And my plan tomorrow is if Cliff takes out its top, I get long, just like I added a position here, and then added a position here, and then added a position here. And now today was the first, that was a range expansion that started low and was all signal. And right now, this is tricky because it's coming into 132. That's a test. If it breaks north of that, in anticipation of their earnings on August 28th, it has a chance to get to here. And if it gets above 140, holy smokes, it'll go to 200. You know, not by the end of August, although I hope it does. I wouldn't advise putting all of your IRA in that one stock for that, like some people in this room have done. My split adjusted price on it is like 60. So I don't have any worries about putting my entire IRA in, but don't do that at home. My IRA is my fun money. But that's a little advanced chart reading. Now, if you look at Tesla, the other key and essential stock, the stock of America, the great a way to interpret that, the peak joy, 1 leg, 2 legs, 3 legs, terminating in this doji right near the pinch, bottoms out. There's your entry after the doji. There's your risk box just to the PSAR flip. And that is a entry at 200 with an $8 risk. And it's at 222. That's 22 over 8. That's about 2.8 R win. Just on the swing trade. And look how directional that thing has been. So there's opportunities for intraday turbo to lock away money. And that thing is, I think, coming to a test at 230. So there's a little bit of easy money. Then does it get above that? If it does, here's the gap that it closes to 240. If it can get across 232, there's no resistance until 240. The real resistance is here at 250. So there's $10 price ladders on Tesla all the way up to 270. Gets above 270, free and clear. And that's a symbol that was already down at 180. And if it gets to 270, that's a 50% move, which it's already done recently in 10 days. And it's got huge volume. So you get you don't get much slippage. You get a continuous signal. So And all I'm doing is reading the turning points in the 30 and the 30. That's your channel. That's the owl channel. And it's still on, it's just short of the 50 yard line in here. It's recovered this much, and it has that much to go in $10 increments. There's 5 $10 channels on that step ladder going up. Very manageable trade. And that's just looking at the daily chart. And if I look at the 30-minute chart, very tradable. 3 days of solid marching. If it gets above 223, man, I'm on it. Anyway, I just wanted to just show you why I love this. I freaking love that. A doji at the end of an exhaustion. The first intraday effort, they cashed it, but they did not panic. And now the amount of uncertainty is that little black box. If it goes below that, I'm hugely short. If it goes above that, I'm long. If it goes above today's high, I'm double long. If it goes through the PSAR dot, I'm triple long. And then I'm good to go. So learning to read the turning points on any time frame. That one happened to be daily bars. Now to get to George's point about today was a rejection day. Yeah, but it wasn't hopeless. I'll say it that way. I look at it as an orderly retracement after a failed attempt to induce panic to the upside. They just pulled their they didn't get damaged at all. So let me get back to Cliff. On the 10-minute. You can see that there was a gap up. Close, open, a little jockeying, and then the urge of the day was this. Couldn't hold it, leg one. They tried a kata two, couldn't hold it. That's where the collapse occurred. That's my favorite short right there. Long-term pain and suffering, first day of trying to recover, failed kata two, crossing the VWAP, smash, and then cash before the close. That's a 2R trade on a 0.07 R10. But they held it above yesterday's close or Friday's close. So that's still, I treat that as they opened it here, they tried a second time and wasn't there. So then they bailed, and then there was no panic selling. They kept it above. This gap held. So if it opens anywhere around in here, it's because there are guys lining up to buy it. So they'll raise the price. And then if that goes, if it gets above here and above there, off we go. But if it doesn't, it falls through here. Short, double short. Perfect. Perfect. I don't have much yellow zone in here at all. I don't have much uncertainty to have to manage. That's why I like that pattern. Okay. As you start specializing, as you're specializing in your symbols, you're trying to feel what the different psychologies are saying and I'm using, you saw me use 3-minute, 10-minute, 30-minute daily bars to sort of gauge the potential. I love the 30. There's your 30 turning point. There's your 30 turning point. That's the channel. So if this fails below here, it goes down to here, and it's going to find support here probably. But if that support fails, that's why it's a huge short. it's got to fight. If it's coming up this way, it's got to fight through the VWAP and then the peak. This price level was the same as that. That's the strong resistance. So I would love to see it open here. Let me try to get long somewhere in here. And if it comes up here and starts to bail, I'm out. And then if it holds and goes again, I'm in. Because I want to be in here before it crosses that line and goes. That's my strategy. That's my scenario and my rehearsal for tomorrow. Okay. All right. That's everything I got for today. We'll get this posted. That little stream of consciousness is going to help you in the future a lot. Okay. Last call for alcohol. We good to go? Yep. Yeah. Hey, for Jonathan, my daughter went into the ER last Saturday with a 105 temperature and spinal headaches. So
Really?
they tested for everything, determined mono, were concerned about meningitis, had the brand new resident come in to do a spinal tap. I think they probably fucked it up. They probably did it wrong. So she started getting worse spinal headaches. They finally, after about 3 days of that pain and suffering, finally came in and had somebody, the attendant, come in and do a blood patch to clean up. And as soon as they did that, done. And she got released the next day. So she missed a week of med school, but she got all the notes and she's catching up. And it's like her 4th week. So she's well early into the program and they understand what's going on. So she's back in good spirits. And last night was the first good night of sleep I've had all week because I've just been.
Spinal headaches are the worst.
Well, oh yeah. Yeah,
Did-
because you can't do anything about it. And the regular pain relief meds don't seem to do anything about it because it's a headache from the inside, it feels like. I don't know the official rules of it. And I'm trying to be a good advocate for her without choking the life out of people that don't have my own sense of urgency. And it's like anything, there's 900 patients in the hospital. She's one of them. They got to do their thing. Parents are always, and but I'm ready to chew nails and choke, do rear naked choke, especially when I do not detect the same level of urgency or careful listening. Because in the other ear, I'm talking to our sister-in-law, who's a 35-year registered nurse, head of the floor, giving us insights into what should be going on, and not all those things were being done. So.
And in the hospital these days, you can't sit back. You've got
to be the advocate.
Just like you did.
Yeah, and her boyfriend's from Belgium, and his accent is thick, and they're young people, and they want to follow authority. So, trying to manage that and manage her mother's state of mind too, because she's a tiger mom when it comes to her kids. So, trying to walk that fine line. Anyway, all systems go, and she's
glad
she's caught up. She's caught up and doing well. So
that's good. That's good. Glad it was early in the semester too. Early in the.
Yeah. If you're ever going to have one, that's the time to have it.
Yes.
All right, guys. You guys take good care, and we'll see you soon.
Thank you.
Yeah.
Thanks. Bye.